The US dollar has ruled global trade for decades. But right now, its biggest threat isn't a war, a crash, or a sanction. It's a whisper. The global power shift has already begun, and most people, they have no idea what's coming. BRICS, once dismissed as just another economic alliance, is now igniting a financial revolution that could shake the very foundation of the dollar's dominance. Listen to this carefully. The BRICS nations are actively pursuing a new currency. Not just any currency, a gold-backed one, specifically designed to challenge the US dollar on the world stage. Now you might be wondering, what's really going on? Back in 2023, news broke that Brazil, Russia, India, China, and South Africa were planning to create a shared BRICS currency. At the time, it sounded like a political statement. But now, as of April 2025, it's progressed. Official updates from recent BRICS summits confirm that discussions are ongoing. Some pilot trade settlements using local currencies and gold reserves are already being tested. And here's the thing, more and more countries are starting to take notice. But why now? Why are these nations suddenly pushing back against the dollar? Let me break it down for you. Number one, the US dollar has been the undisputed king of global trade for decades, especially when it comes to oil. Number two, in recent years, US-led sanctions tied to the dollar have cornered countries like Russia and China, forcing them to look for other ways to trade. Number three, meanwhile, inflation is rising. US debt is ballooning, currently over $34 trillion as of 2025, and political instability is shaking investor confidence. Put it all together, and the dollar doesn't look so invincible anymore. Do you know that China and Russia have already started conducting trade in Yuan and rubles, completely bypassing the dollar? That's not a theory. That's happening right now. And here's something even more alarming. According to IMF COFR data, the dollar's share of global reserves has dropped from 71% in 1999 to just around 58.4% as of early 2025. And guess what central banks are stockpiling instead? Gold. Lots of it. Why gold? Because gold doesn't answer to Washington. It can't be frozen, can't be inflated, and after 5,000 years, it's still the ultimate safe haven. And hey, I know it can be annoying when creators pause to say this, but it really matters. If you're finding this eye-opening, take a second to subscribe. I get it. Those subscribe prompts can be distracting. But for a small channel like this, it's crucial. That simple click helps us grow and deliver more independent content without corporate agendas. So imagine this. BRICS successfully launches a new currency, backed by gold. What happens next? Countries across Africa, Latin America, and Southeast Asia, many of them tired of US pressure, might jump on board. And just like that, the dollar starts to lose its grip. Let's rewind for a moment. This isn't the first time a challenge to the dollar has appeared. Remember when the euro launched? Some believed it would replace the dollar as the world's reserve currency. But despite its promise, it never quite got there. Others tried too. The Japanese yen, the Chinese yuan, even IMF's special drawing rights. None succeeded. BRICS, however, is a different story. This is more than just money. It's about power. It's about a coalition of emerging economies coming together, not just through trade, but through ideology, shared resources, and growing global influence. Now here's something you need to think about. Some experts still argue that a BRICS currency won't work. Why? Because the BRICS countries are too different. Different economies, different political systems, different inflation and interest rates, no shared central bank. India refuses to let BRICS become a China-led project. Brazil's economy swings with commodity prices and faces inflation pressures. And Russia? It's more dependent on Beijing than ever. Can these rivals really agree on a shared currency? The most likely outcome: a digital gold voucher for trade between BRICS members, not a public currency. Why? Because full monetary union would require India and China to trust each other, and that's not happening. Meanwhile, The allies of this movement are multiplying. Saudi Arabia now accepts Yuan for 12% of its oil exports. Kenya and Egypt are ditching the dollar for BRICS trade. Even France just settled a LNG deal in Yuan. The snowball is rolling. This isn't just BRICS versus the dollar. It's the dollar versus a rising network of alternatives. And maybe the real threat to the dollar isn't one massive replacement. Maybe it's death by 1,000 cuts. Countries slowly moving away from the dollar, not all at once, but trade by trade, deal by deal, quietly and steadily. And that's how real revolutions start. Not with a bang, but with a whisper. Then suddenly, everything changes. Now you might ask, what does this mean for you? Let me break it down again. Number 1, a weaker dollar could lead to higher prices at the gas station, the grocery store, and even for your online shopping. Number 2, your investments? They could feel the ripple effects, especially if U.S. financial markets become less attractive to foreign investors. Number 3, even your job or travel plans could be affected, especially if you work in global trade, tourism, or international business. This isn't just about global finance. It's about your wallet. It touches every part of your life, whether you see it or not. So, will BRICS succeed in launching a new currency? No one knows for sure. But one thing is crystal clear. The world is no longer waiting for permission to imagine alternatives to the dollar. The dollar won't collapse overnight. But with every oil deal in yuan, gas trade in rubles, and African loan in gold, the unthinkable becomes inevitable. A world where the dollar is first among equals, not the only king. This channel is here to challenge the headlines, decode the data, and uncover the hidden forces shaping our future. Because in a world this uncertain, understanding the truth might just be your most powerful asset. If you found this insightful, don't forget to like, share, and subscribe. It helps us reach more curious minds like yours.